Gruh Finance has found a new home in Bandhan Bank. The HDFC group company will be merged with the country's youngest full-fledged bank in what will be one of the largest deals in the Indian NBFC space. This all-share deal will also help Bandhan Bank's promoters bring down their shareholding as mandated by the Reserve Bank of India, and HDFC will just hold about 15% in Bandhan Bank. All this, of course, is subject to regulatory approvals. Questions have also been raised on the premium that Bandhan Bank is paying for the deal to go through. But does this make sense in the long run? Bernstein thinks so. Gautam Chigani, Director India Financial at Sanford Bernstein, who joins us from Singapore to talk about this deal in greater length. Gautam, thank you so much for joining in. What have you made of this transaction first, specifically with respect to Bandhan? You saw the market react negatively yesterday. What do you think are the benefits that are synergy benefits that get accrued to both the parties?
Yeah, I think this merger is a classic long-term, short-term dichotomy. So in the short term, Bandhan has to dilute its promoter holding, and wants to buy a fairly synergistic asset in the form of affordable housing finance. So it pays up a fairly high premium to buy Gruh Housing Finance, which kind of has reflected in the dilution and reflected in the stock market reaction. But when you kind of see this on a long-term basis, Bandhan, which is a primarily Central India and East India dominant franchise and distribution, gets access to the Western markets, which is where Gruh is strong, particularly Maharashtra and Gujarat. Second, it gets access to a product which is a fairly specialized product, which is low-ticket, affordable housing finance and the specialized processes behind it. So what Bandhan emerges after this is a full-service financial inclusion platform, pan-India. And when you kind of see that in the context of the nature of the market, which is, I always call India the largest mass market financial inclusion market in the world, even larger than Indonesia, which has Bank Rakyat Indonesia. So I think that's what Bandhan gets. Bandhan gets a fairly large pan-India and builds one of the leading financial inclusion platforms. So from a long-term scalability point of view, this is a very, very interesting and a very, very strategically aligned transaction.
Gautam, one aspect of this obviously is the regulatory directive that the promoters of Bandhan have to bring down their stake. Prior to that, and the restrictions being placed on Bandhan, it's not like the promoters had very actively talked about diversifying into new products. They did intend to, but they said they'll go in the geographies that they know and they'll go slowly but surely. So in some ways, this is a little bit of a forced deal on them.
Yes, I mean, I don't think one should deny that. I think it is a forced deal. I don't think they would have voluntarily gone ahead and sort of bought something at 13 times price to book. So it is a forced deal. But now that it has happened, if you kind of make sense of it, what Bandhan is trying to build, given that Bandhan has a fairly successful track record of building India's largest microfinance bank. So if you kind of extrapolate that from a financial inclusion standpoint, it becomes interesting. So I wouldn't deny that, yes, it's something which is regulatorily driven. I mean, this is also what Kotak did, obviously with a different asset some time back in terms of acquiring, and sort of this is one of the tried and tested methods now to kind of meet regulatory requirements and at the same time meet your business requirements. So it's kind of achieving two objectives with a single action.
You've called this Bandhan's need and HDFC's fortune. What is in it for HDFC? What does Gruh? How does this fulfill Gruh's ambition in this space that it couldn't have done on its own?
Everything. It's very interesting from an HDFC point of view. The reason it's very interesting from HDFC's point of view because it sells an asset which is growing at 20% and projected to grow slightly slower than that in the next 2 years. It's an NBFC, it's a housing finance company, so it doesn't enjoy the deposit franchise and the scalability of a bank. So if you want to own 50% in a housing finance company, which is regional, monoline, versus owning 15% in a pan-India leading financial inclusion platform, if you take a 10-year view or a 7-year view of that, you know which is the right one to hold. So that's why I call it HDFC's fortune, because now, I always call it the HDFC group, the Berkshire of financial services for India. So now it has a full suite. It has mass affluent banking in the form of HDFC Bank. It has leading mass market banking in form of Bandhan Bank. And then it has all the insurance and the asset management business, which are leading businesses in their own right. So I think that's very interesting because now it goes from a regional player to a full service bank, and that from a long-term point of view is very value enhancing for HDFC Limited. And also and the fact that it sold Gruh at this valuation which it was trading in the market.
Gautam, everybody had wondered whether Gruh would get merged into HDFC Limited. In fact, we were asking KK Mistry this question at the press conference yesterday. Why did you not just merge it back into HDFC, especially since affordable housing is now, sort of the rage of town, and they are doing that on their own book as well. But I think the valuations probably played a large part in it.
No, I think it is HDFC's strategic objectives. I don't think HDFC just wanted to do affordable housing finance, which it can do anyways in the HDFC Limited entity. Except that Gruh has some certain specialized skills in rural housing and small ticket housing. But I think the ambitions are much wider, right? I mean, I'm not saying strategically, but more as a financial investor. HDFC Limited now gets access to one of the largest microfinance markets in the world, which is India. And through one of the leading franchises, which is Bandhan. So when you put that on a pan-India basis, it's a very interesting platform to be part of. So versus merging that with the main parent entity versus being a large shareholder in a premier financial inclusion franchise, I think the choice is very clear.
Gautam, from the Bandhan standpoint, so now they have a portfolio which is housing finance. They have obviously the micro loans. They've been getting into small business loans. You see their suite as being more or less complete. I think it's very clear that the customer segment that they want to target is rural and semi-urban. One should not expect them to go away from that, but probably build in more products into this segment.
Yeah, I mean, Bandhan is a very interesting business because it caters to a segment that very few cater to amongst the mainstream banks. So I think the strategic focus on the mass market, microfinance kind of segment would remain. But except that now, you can sell them multiple products. And obviously, you can sell microfinance in the Western markets where Bandhan is not very strong, and the affordable housing product can be sold in the Eastern and Central markets where Gruh is not very strong. So I think there is a lot to achieve here in the bank. I mean, I don't think they would want to go beyond this because if you just sell these two products pan-India, then it's a very, very scalable, large franchise going forward. So I think they wouldn't kind of divert away from this. This is fairly self-sufficient in itself.
All right, quick last word, Gautam. From a stock perspective, I assume there will be some overhang, both of how easily the merger plays out, but also the regulatory issues, whether the RBI allows HDF to stay at 15 or will they have to sell that down. That may remain a bit of a stock overhang.
Yeah, I think this stock, this stock trades expensive. There's no doubt about it. We just like the long-term story. Now, the thing is, there is already a supply overhang because even after this merger, this 82% has gone down to 60%. So there is still 20% more to go in terms of diluting the shareholding. Except that they've made significant progress now from a regulatory standpoint. So RBI should be happy and kind of take away the ban they imposed on the bank some time back. So I think the regulatory overreach or regulatory reach which had happened last time kind of settles down. The stock supply side pressure, be it in the form of HDFC selling 5% because if RBI doesn't allow them, or Bandhan itself diluting further 20% remains, and also the fact that they paid a premium price for this asset, so there is a dilutive impact on the EPS as well as book value as well as the shareholding. So from that point of view, the stock remains under pressure. But the earnings growth on this stock has been so strong. Every time we project something, the company ends up beating it. So I think 30 to 35% EPS growth, if it continues delivering, it should be able to. And now that it is an HDFC Limited backed company, not in the more as a financial investor, it should be able to maintain the valuation and the growth. And then I think in the long run, investors will be still okay. And maybe some of this downside that's coming right now may be an opportunity.
Interesting, Gautam. We'll leave it there. Thank you so much indeed for joining us with your perspective. That's your view of Sanford Bernstein. Thumbs up to this deal between Gruh Finance and Bandhan Bank.